Alrighty, guys. So we are officially recording. Thank you guys so much for being here. Today is Sunday, and it's a brand new month. It's September 3rd, 2017. So, brand new month, brand new opportunities. August is all done. I hope you guys had a wonderful last week in August. I hope you guys stayed away from NFP, which was Friday. That was actually the 1st of September, but I hope you guys stayed away from trading NFP on Friday. It was pretty crazy what the markets did, and as I recommended in Telegram and the premium group everywhere all around, to stay out of the markets around NFP. I always recommend before NFP closing all your positions out. Pretty much should be in done for the week because it always happens on a Friday, so it's always going to happen right before the markets close. So it's just not worth taking a risk, taking a gamble. And Friday was a perfect example of why you don't want to trade NFP because everybody, I'm sure a lot of people were expecting it to be pretty strong for the dollar, and it actually came in very weak for the dollar. So non-farm payrolls on Friday was absolutely terrible for the dollar. I believe we saw unemployment rates go up by 0.1%. We saw wage growth go down by 0.1%. And we saw the actual non-farm payrolls report come out well below what was expected. So it was very bad for the dollar. We can actually zoom on over just so you guys can kind of see. We can go to the first and we can see. Yeah, so this is it. This is it right here. So Friday. So yeah, we saw actually average hourly earnings went down by 0.2%. So actually went down 0.1% lower than the forecast, but 0.2% lower than the previous month. We saw unemployment rates go up by 0.1%. We saw the non-farm employment change way under forecast at about 156,000 jobs added to payroll companies last month. So as I mentioned on Friday in Telegram and the premium inside Slack for the premium group, this is further reinforcing my bias on a bearish dollar. So we'll be looking this week to sell the dollar, in my opinion. And I think that there's some good opportunities to sell the dollar. So just very quickly before we get started to look at the, and also I want to thank everybody that is brand new. I see there's a ton of brand new people joining today. So I really appreciate you guys for being here. If you guys, if this is your first webinar watching this, so my name is David Schinkel. I'm the CEO and founder of Positive Traders. As I like to tell everybody, if you guys are brand new, this is my weekly analysis for the markets, okay? So what I'm about to go over with as far as the technicals go, a lot of these targets are going to be long-term targets, may or may not get hit just this week, but they are, this is weekly time frame analysis, okay? This is my long-term bias on these pairs. So, you know, if I say, you know, I'm looking at selling this pair, I may be looking at buying this pair. It doesn't mean that right when I get off the webinar, you know, you or me or anybody should just be buying or selling the pairs that I'm talking about. We need to wait for structure. We need to wait for price action to give us signals to the certain directions that we're biased towards. So very important that you guys keep that in mind as you guys are watching my analysis. And please, I also want to make this very clear. I am about a 70 to 80% accurate trader. Okay, losses are imminent, so my trades are not perfect. So that's another thing is don't over leverage your account, guys. Always use proper risk management. Be risking 1 to 2% or less of your account per trade. But that's kind of just my little disclaimer I want to go over before. And if this helps you guys out and you're interested in joining our premium group, we've got a trade copier. I do a webinar just like this every single Monday, Tuesday, Wednesday, and Thursday for the premium members. A little bit more in depth for the premium members. This is kind of a little quick run through on the market, but you can visit our website for more information, which is positivetraders.us. So let's go ahead and get started. This week in the markets, as far as economic calendar is concerned, we do want to be careful. Tomorrow is Labor Day, so anybody that is in the U.S., I believe possibly Canada celebrates it as well. I'm not 100% sure on that, but happy Labor Day to everybody celebrating it tomorrow. That does mean U.S. banks are closed, and that does mean volatility will probably be high in the markets. Liquidity will be very low in the markets. All right. So if you guys are new to trading, you should definitely know something good to write down also that the US dollar makes up a little bit over 60% of the volume in the Forex markets. So when we see the banks close, all the US banks closed, it's going to decrease the volatility. It's going to decrease the liquidity inside the markets, and it's going to increase the volatility because it's going to be more volatile because it's not as liquid, if that makes sense. Reginald says, yes, Canada does Labor Day. All right, so that makes sense. So then we have two major central banks closed tomorrow. We have all U.S. banks closed and all Canadian banks closed tomorrow. So expect high volatility, low liquidity in the markets. Now, throughout this week, there is quite a few red folders. I'm not going to go over all of them, but there is a lot of Canadian news this week. So On Friday, we have some employment change and unemployment rate, which is going to be reported for CAD. And then we also have some building permits on Thursday. That's a medium impact, so not as crazy. But then Wednesday, we do have basically their rate statement. This is where they decide if they're going to raise interest rates or decrease interest rates. Some central banks call it interest rates. Other ones call it an overnight rate. It's the all interest rates it's the percentage charged from one bank to another for lending them money overnight. All right, so that's why some call it the overnight rates. Other ones just call it interest rate, but that's what it means. So let's move straight into the technicals. I want to first start off with the dollar index, this can provide you with a bias of where we're going to be going with all the other pairs. You guys are also new. You guys will notice I only trade these 9 pairs over to the right over here. I don't actually trade the dollar index. I just use it as a gauge to decide how I'm going to trade all the other pairs. I have Bitcoin and Litecoin down here. That's just and oil. That's just for my own personal portfolio and stuff. I don't actually analyze that with you guys at this point. But if you are not using the dollar index to analyze and you trade USD pairs, I highly recommend looking at the dollar index when you're trading. It's a big indicator of what's going to happen to everything else. And I'm a big correlation trader. So, pretty much as long as I know what is happening to the dollar index, I know what's happening to all the other pairs. So MKK asks, what is DXY? DXY is the US dollar currency index. It measures the strength compared to a bunch of other currencies, about a dozen other currencies, of how strong the dollar is, okay, how strong the US dollar is. So it's pretty simple. If this is going down, it's bad for the dollar. If it's going up, it's good for the dollar. So we can see since the beginning of the year, we have in a bearish or downtrend on the dollar. And something very key, some key levels to keep in mind with the dollar index, we just recently broke through the 93 level. It's been multi-year support, which we can see right here. We broke through it actually not last week, but we broke through it the week previous. But this past week, so last week we actually saw price move back up into that range and then close back outside of it. So that further reinforces my bias to a weaker dollar, and I do expect this week for the dollar to continue to fall. So both on a technical level and a fundamental level, seeing that NFP was terrible on Friday, I think that should help also catalyst a weaker dollar throughout this week. So keep that in mind. Also, something to keep in mind is the dollar index does the complete opposite of Euro USD. So we can see if we actually look at these two, so you'll notice something if I kind of click on these two really, really quickly, you'll see that they are exactly the opposite of each other, okay? So the dollar index and Euro USD have about a 99% negative correlation almost, all the time. So about 99% of the time, they're going to do the exact opposite of each other. So it's really nice. And then once you know what's happening with the dollar index, you know where Euro USD is going. You can figure out where things like gold is going, USD Swiss franc. And then once you know where those are going, you can figure out things like where USD CAD is going, AUD USD, and NZD USD is going. So there is a reason why I specifically stick to these 9 pairs. I know some traders jump around and trade a bunch of other pairs, but for the past couple of years, I have just been trading only these pairs, and it's really great. Now I know them like the back of my hand, and I can tell you pretty much what's happening not pretty much, I can tell you what's happening to any of these pairs without even having to look at the charts. So now that we've looked at the dollar index and we're continuing our bias of a bearish dollar, let's go ahead and look at Euro USD. What's up, Juan? Welcome. So Euro USD is, I'm looking at a bullish Euro USD still, okay, because I'm looking at a weaker dollar. So a couple weeks ago, we saw Euro USD break out of this descending channel. A lot of consolidation in this area. If I break it down on the 4-hour, you guys can see as well. We were in this really nice descending channel. We actually made a top right around the 119 level, broke down a little bit, consolidated in a descending pattern, descending channel. Up until the 117.50 level, we broke out of it, we retested it, and since there, we've been pretty bullish. We actually hit the 120 level, which was our 161.8% extension level. So the beauty of fib levels is absolutely phenomenal. We can see that Euro USD went right up to touch about the 120.50 level before making a little bit of a pullback down last week. It is quite interesting. This candle right here is NFP. So it's pretty interesting. We saw a very, and this is, this goes to further reinforce and enhance my opinion on why I don't recommend trading NFP, because Even though NFP was absolutely terrible for the dollar, we did see. So if you guys don't know, just a little piece of information you should definitely write down if you don't know this, that if we're looking at a weak dollar, that means that this pair should be going up, because if you're buying Euro USD, you are buying the euro and you're selling the dollar. Okay, if the US dollar is strengthening, then you're selling this pair, because that is you're selling the euro and you're buying the dollar. You're always doing this. Whatever you're doing to the first currency, you're always which they call the base currency, which in this case is the euro. You're doing the exact opposite to the quote currency, which in this case is your USD. So to kind of tie that all together, because we saw a very weak NFP, we did see this shoot up originally, right? And I'm sure and this is why I don't recommend trading NFP, is because I'm sure there were a ton of people out there, maybe not in here, but I'm sure there were a lot of people that probably ended up just buying this pair blindly, just in their analysis was just simply that, okay, NFP was bad for the dollar, so this has to go up. And that's just simply not true. You know, Forex is heavily manipulated, and that goes to show why I don't recommend trading NFP. So we actually saw the markets close lower than where NFP came out, which is very, very interesting. You know, we saw some other pairs, you know, that like USD Jappy, which we'll look at in a second, a couple other pairs that, you know, like gold and things like that, you know, did skyrocket in the direction for a weak dollar. But Euro USD had trouble, you know, breaking out of this 119 level. But I do think that this week, based on the break of this flag right here a couple weeks ago, I still think that the overall trend is still up. But we are seeing quite a bit of resistance in this area. So I'll let you guys know, this is what I would be looking for. I'd be looking for a break of the 119 level, look for a retest, and then look for it to continue moving up higher, back to previous highs. And then, of course, making new highs up into potentially like the 121, 122 range. So that's my heavy analysis on Euro USD. Gold, although I am bearish on the dollar, so, you know, and I'm bullish on Euro USD, I do think gold has potential to continue moving up higher to the 161.8 retracement level, which is also previous highs around the around the 1350 area, 1360 area. But gold has been very volatile lately. Over the past couple weeks, we've seen it move all the way as low as 1275 up to 1336. So that's like a $60 difference in just 2 weeks with gold. Shows you guys how volatile gold can be. And, you know, we're at extreme highs right now. I don't like buying at extreme highs. And so I'm just going to let's stay on the sidelines for right now. And let's continue moving. And let's go ahead and look at USD Swiss franc. All right. USD Swiss franc, I am expecting this to continue moving lower. If you guys are new and you guys are writing these correlations down, so we know that, because I've already shown you guys that the dollar index is the opposite of Euro USD. All right, Euro USD and gold have a positive correlation, so they move in the same direction most of the time. Now, Euro USD and USD Swiss franc, this pair that we're on right now, this and Euro USD have a negative correlation to each other. So if you look at them on the daily and you flip back and forth between the charts, they're going to look very similar in the opposite spectrum, okay, in opposite regards. So I'm expecting this pair to go down lower throughout this week. So watch for some structure for this pair to move to the downside. So Euro USD bullish, USD Swiss franc bearish. Pound dollar does look poised to the upside. In the all last week, we saw a lot of candles. Look at the wicks on all these candles last week. You see that wick, especially that wick, that wick, that wick. Lots of bullish momentum, lots of buying pressure on these pairs. Now, it is capped by this trend line that you guys can see. We do have this trend line right here, and we're coming up to it right now where we're seeing some resistance. So it'll be interesting to see what happens. Oops, let me undo that real quick. It'll be interesting to see what happens in this area. Let me change the color of this actually. It'll be interesting to see what happens in this area right here when it comes to the trend line. What I would be looking for, honestly, guys, is look for a break of this trend line, a bounce, and then this pair continuing to move up into previous highs. But I am going to have a bullish. We haven't wanted to trade pound dollar for a while now. All last week I was saying let's stay on the sidelines, but I think this week it is going to offer some good opportunities to buy in the markets. So be looking for upside, you know, on this pair and Euro USD. Those are some of my my favorite things to look at right now. Pound yen, I am going to recommend staying on the sidelines. If we do see a stronger pound, then this pair could be continuing moving up higher. But if we see a weaker dollar, then that also means that there's a pressure on buying the yen. All right, just like a weaker dollar, there's pressure on buying gold. I think I explained this last week in last week's webinar that gold and yen move positively together. So if we see gold go up, we're going to see yen go up. That doesn't mean we're going to see pound yen go up, though. It means we're going to see pound yen go down, because a strong yen is to the downside on this pair. So, lots of pressure to the upside, lots of pressure to the downside. So because it's kind of right in the middle and we don't have a clear direction, I'm going to say let's just sit on the sidelines with this pair right now. All right, USD yen, guys. Very interesting pair here. It moved definitely in relationship to what happened on Friday. We saw the dollar yen drop towards the end of the week. Now, this week, I will be looking for further downside. I'm still long-term bearish on this pair, guys. I still am expecting a lot further downside on this pair. I believe right there is the 161.8. Yeah. So the inverse of kind of what we're looking for Euro USD, we're looking. So another thing, guys, just as far as correlations go, Euro USD and dollar yen have a negative correlation. So if we're going to be buying Euro USD, or we're expecting upside on Euro USD, then we're expecting downside on dollar yen. All right. Now you guys can see my long-term targets, and I think it could go even further lower than here. I think the dollar could significantly weaken over the next coming weeks and months going into next year. But I think our first long-term target to the downside will definitely be this 161.8, around the 107.50 area. And then lower potentially. I just want to see what sort of structure we get in this area. So I'll delete that for a moment, but just to look at the long-term aspect. I don't know why that wasn't being deleted. Just so you guys can kind of see where I'm coming from with my long-term technical bias on USD Jappy. We had this wedge, okay, this wedge that we were just doing, this, we went down, up, down, up, down, and we finally came down to this bottom right here. I'm sure a lot of people were buying in that area. We didn't buy in this area. We were just looking to see what happens. Sure enough, it broke, made a nice retest, dropped, made another retest, and dropped again. And it almost made a third retest. Not quite, but it did retest this zone right here. Now, I think that because we broke out of this wedge, I think that we're expecting a lot further downside on this pair. Just based on the technicals and based on the way wedges generally form and then break out. We're just seeing a lot of consolidation in this area right here, a lot of sideways consolidation, and the market's deciding what happens. Now, alternately, if for some reason we do see this pair fly up back into this wedge, then let's be careful on what happens here. We may be looking at a bullish dollar, but as for right now, my bias is to the downside on this pair. Let's go ahead and look at AUD USD and NZD USD. These two pairs, I have been looking at them. I have been interested in trading them. But for this week, there's just been so much consolidation on these pairs. I'm going to say let's stay on the sidelines. Last week, we saw AUD. This is something we were looking at in the premium group last week. Last week, we saw this red candle right here, that red bearish candle come right back down to this trend line that we can see that formed, right? And we were watching this closely. We wanted to see what happens. Is it gonna break this level and continue moving lower, or was it going to bounce off this trend line? Sure enough, we saw a bounce of this trend line. So this support trend line is very much valid. And I've been telling you guys for weeks now, if you guys have watched the past, I think 2 or 3 weeks of our daily live session, our weekly outlook, I've been saying that this trend line, this area, especially on a weaker dollar, this is our next target level. But we just haven't really seen a lot of momentum with this pair. We've seen price action carrying this pair sideways. And so, it's possible we could see it take its time creeping up to this trend line, or we may, once we do see a breakout, we may see it just continue moving up a lot higher. But as of right now, as I mentioned, going over the analysis on Euro USD, going over the analysis on pound dollar, going over the analysis on USD Swiss franc, these pairs are offering a lot better risk to reward right now than I think AUD USD and NZD USD is. So moving on to NZD USD, another very interesting pair right now. Although we're seeing a very weak dollar, we continue to see a sell-off of the dollar. We see an even weaker New Zealand dollar, all right? And that's forcing this pair to the downside. So we can see this very strong trend line right here. That was actually broke last week. And so it's going to be interesting to see what happens right at the level that it's at right now. What I'm thinking, and this is just my opinion, guys, I do think that New Zealand dollar is going to pull back up into this area, maybe find some support. on a retest in this zone and then continue moving higher. You know, I just think that the US dollar is going to definitely continue to weaken. So I am looking for a lot of downside on this pair. Let's see, someone I saw Head and Shoulders. Man, you said I've been selling this pair for the break of the Head and Shoulders. Yeah, so that's actually interesting. We did mark this up last week in the premium group. We marked up this Head and Shoulders right here. And we saw a break of it. Oops, let me move that up a little bit. Oh, hold on, guys. Going all over the place here. Let me just delete this. I don't know what happened. All right, let's redo. All right, from the bottom to the top of the left shoulder, to the break, to the top of the head, and then the break right here. Boom, and boom. So yeah, so Manny, I'm assuming this is what you're actually talking about. We did see a break of the neckline in this area, and then we did see a retest of this neckline, and it continuing going down south. So definitely is a good reinforcement of how technicals can overcome fundamentals on a pretty regular basis. But I want to see what happens. I'm very interested. You know, I'm not interested in trading this pair just because of how weak the dollar is right now and how weak I am expecting the dollar to get. Should mean that this pair should be continuing to go up higher. But if the New Zealand dollar continues to weaken like it has and overcome, you know, be weaker than the US dollar, then I would expect a lot of downside on, I would expect further downside on this pair, even if the dollar continues to weaken. And this is another amazing pair I want to look at. Guys, if you guys have been following me for weeks, I have been preaching for weeks and weeks and weeks now. Like literally, I think the past month that I've been doing the weekly, the free weekly outlook, and then as well as the daily ones in the premium group. I am still very much so long-term bearish on USD CAD. And I'll tell you guys why. Let's go ahead and look at this on the weekly. And it's not hard to tell if you keep your time frames high. And this is one thing I stress a lot with new traders is that, you know, it's quality over quantity when it comes to trading, okay? All these groups out there that advertise 5 signals a day, 10 signals a day, you're going to end up losing your money long term because that's just not the way the markets work. It's a lot of patience. As a professional trader, I spend more time waiting for setups on the sidelines than I do actually in trades. And that's just the way it has to be. You know, the more exposure into the markets that you have, the more risk you put into the markets, you know, the higher your risk is going to be overall. So it's better to just have a quality over quantity type of mentality. And so if you guys can't already see, this is why I'm bearish long term, is we saw this huge decline throughout early 2016 into middle of 2020. Early 2016 to the middle of 2016. And we saw this huge, for almost 2 years, we saw this ginormous channel form. All right, this huge channel that presented a lot of opportunities for us in here over the past couple of years, but over the past year or so. But we actually did see a break of it a couple months ago. All right. Now, this is what leads me to believe that this pair is going to continue moving higher. Now, why do I think it's going to keep going lower than it already is? Well, there's a couple things. I mean, just based off of the patterns that we've been getting on the weekly, I even told you guys 3 weeks ago, this pattern right here, classic, free money, easy money in the markets, right? We took trades in the premium group to make money on this already. Inside of here, we're looking to get back into this trade, looking for more long-term swing trades and scalps in between. But this is literally just screams free money, guys. When you see a pattern like that, a bearish engulfing candle like that, especially in a huge downtrend and on the weekly time frame, that's just huge money to the downside. Same with this week, all right? We have a very, very nice bearish candle. We saw a huge wick formed on the candle last week and just a lot of risk to the downside. So there's just my bias is very strong to the downside. And I think it's going to even go further than this first target. I mean, if we actually measure this first drop, it's about 2,000 pips, all right, that we look at. So it's about 2,000 pips if you see right there. So if we measure from the break of this consolidation, 2,000 pips straight down, you can see that there's still a long ways for this pair to fall for it to equal a leg similar to the first drop. Okay, so this is a very, very classic ABC pattern: A, B, C, wave 1, wave 2, wave 3. All right, first impulse wave first pullback wave, second impulse wave. So all around, guys, just the candlestick patterns, the wave analysis, the just the pure price action and structure that we're getting, lots of downside risk. And some of you guys might be asking, why here first? Why do you pick 2122 first? Well, it's very simple. I love my Fibonacci extension levels. So if we fib this out and we get our extension level, boom, you can see our 161.8 Fibonacci extension level, and that gives us a target. The reason I like to use Fibonacci extension levels is because, especially when you're making new lows like this, and you look to the left, look, there is no support over here. All right, there's nothing to go off of. So you have to use other tools. You have to use, everything that you've learned and that you learn, and you start to build a strategy off of it. And so there's going to be different times you use different tools. So in this scenario, when we were in a very, very trending market, we're going to be using our fib extension to be able to plot our targets. And that's the same thing like we did with Euro USD. So just to give you guys an idea with this too, just to prove to you how well it works, if we fib out this right here before price even went up there, I mean, guys, go, if you think, I know some of you guys that are probably new probably think I just drew this before this webinar to make it look like I'm super accurate or something. I promise you, I have everything on YouTube. Go watch all my previous weekly webinars long before price ever touched this area, long before, weeks before, when price was still all the way down here. I said, just watch, guys, Euro USD is going to continue moving higher. And it went right to our area. But I use that because when I look to the left here, there's no resistance. There's no solid levels of resistance. So you have to use your other tools. So that just, is to show you that I'm not just pulling stuff from thin air to make me look good. I am a fairly accurate trader, I'd like to think. So Paul says I need to learn patience. Yeah, patience is the name of the game, guys. So that's pretty much it for the week. Now, please, guys, if you guys can give me 60 seconds, especially for some of you guys that are new, I just want to just go over one thing with you guys. This is so important that some of you guys can understand why I stress patience in the markets, and I just want to quickly go over this, all right? So I promise it won't take more than 90 seconds. All right, so let's say you take 10 trades, all right? And this is to show you guys the power of compounding, all right? So 10 trades. 10, we'll just call it TR because I'm drawing with a mouse, guys, so excuse my handwriting. I don't have my stylus right now. So 10 trades, all right? So we take 10 trades. Let's just say 5 of them win and 5 of them lose, all right? If you've been in the markets for, you don't even have to have been trading for a really long time. If you've been in the markets for 6 months to a year, grinding, seriously grinding, learning the markets and dedicating some time to learn this skill, this 5 out of 10 win rate is completely doable. You can be the worst trader in the world and still win 5 out of 10 trades for the most part, all right? So, and let's say with every single trade, you have a 1 to 2 risk reward, meaning that every single trade you risk, let's just say, for example, you risk 2%. Sorry, guys, my handwriting is just terrible right now. I'm using a very sensitive mouse, by the way, so that's also why. You're risking 2% to make 4%, all right? On every single trade. That means your stop loss is at 2% and your take profit is at 4%. And you can do that by making sure you enter trades that are only a good risk reward. And I teach that, and I teach this type of thing, this type of stuff in the premium group. I teach this exactly. So with 5 wins, if using this scenario right here, 2% loss on all your losses and 4% win on all your wins. If you have 5 wins, that equals, what's 5 times 4, guys? Easy math, right? 20%. All right. So that is plus 20%. Sorry, my handwriting is terrible. I'm so sorry. And now that if you have 5 losses and our 5 losses at 2%, what does that mean? You lose 10%. All right. So do the math, guys. If you make 20% and you lose 10%, what are you profiting? You're profiting 10%. All right. So you're still making 10%. This is only on 10 trades, guys. 10 trades. That's it. And this is with a 5 out of 10 win rate. All right. In the premium group, my signals are 7 to 8 out of 10 wins out of 10. All right, so that means that your percentage that you gain can be even higher, but we're just taking a very conservative number, plus 10%. Now, this is the very important part, guys. Stay with me, okay? 10%, if you take 10%, let's go to Forex, let's go to the compounding calculator very quickly. If you can consistently do that, that's only 10 trades, guys. Imagine 10 trades in a month, okay? 10 trades in a whole month. Markets are open 22 days out of the month, totally doable. Let's say you start with a $1,000 balance, and you make that 10% per month. If you do this for 10 years, guys, 120 months. Some of you guys might think, oh, 10 years is too long for me. But I mean, really, you guys probably know somebody in your life that's been working the same job for 5 years, 10 years, they get paid the same. So this is to show you how powerful it is. If you calculate this, you will end up with $92,709,068. This is real, guys. That's $92 million after 10 years off of $1,000. Now, some of you guys might say, oh, that's not realistic. You're not going to have 10% every month. You're right. You're right. But if you can average 10% a month over the span of a year, that means maybe some months you make 20%, other months you make 25%, some months you make 1%. But overall, in 12 months, if you can make 120%, that breaks down to 10%. That's an average of 10% every single month. So you have to have that long-term mindset, because you are right. 10% might not happen every single month, but we're talking over a span of time. And just to be even more conservative, let's say you didn't even make 10%. Let's say it was less than that. Even if you made, like let's say you average 7% a month, that's $3 million. Yeah, $3.3 million after 10 years. Let's go back to that 10%. Even after 5 years, you're still sitting pretty nicely. Okay, that's $304,000 that you make. $304,481.64 that you make after 5 years. I think every single one of you guys in here would agree that starting with $1,000 and being patient for 5 or 10 years is definitely worth making that kind of money. So I want every single one of you guys in here to get out of that short-term mindset. I'm sick of seeing people on social media, on Instagram, on Facebook, posting, $20,000 days at the $1,000 account. I guarantee you guys they are fake. Okay, simple. Ask them for a MyFX book. It's that simple. Ask them for a track record. If they aren't willing to give you a MyFX book, if they aren't willing to take a minute and 30 seconds to connect their account to a MyFX book and show you their results, like, not only one does that prove that something is shady, but if you were that person, if you made 20 grand in a month or a week or whatever off of $1,000, wouldn't you do everything in the world if you really did it and it was on a live account? Wouldn't you do everything in the world to prove to people that was real, because that would make your business grow like crazy? But these people aren't going to show that to you because it's not real. They're doing it on demo accounts. Like, they literally have one demo account. They have 2 demo accounts, okay? And at the beginning of the week, they'll take a buy on one position on one demo account, and they'll take a sell on the other account. And whichever one is in profit at the end of the week, they'll screenshot that and post it all over social media and make you think that they're the best trader in the world. But they'll never connect it to a MyFX book because it's not a real account, guys. So you have to get out of that short-term mindset that these people on social media are putting a lot of people into nowadays, that I keep seeing on a daily basis, and it makes me sick, guys, because that's not the way Forex trading is. It's not turn $1,000 into $10,000 in a month or even in a year. Things take time. So that's my spiel for the week, guys. If you found value out of this, please, if you're watching the replay, leave a comment, whatever. Reach out to me if you have any questions. If you want to check out our premium group, visit positivetraders.us. It goes over everything that we go over. But other than that, you guys have a safe trading week. Remember, keep those risks low. Have that long-term outlook on Forex, and have a great week, guys. See you later.